Hi there, folks, and welcome to Trade the Structure and the 5 minute trading day. So, as the name suggests, it was a nice, quick trade today. It was all of about a minute and a half. So, you'll see me just placing the order in now. According to the strategy rules, we're looking for a bit of a push down today. Now, the market was kind of weak on the open. It's been weak across the board. So, that's the reasoning behind placing that trade there. So, you'll see it was placed at to sell at 22.18 or 248. I think it was 248, and then it kicks off any second now. Now, there's a little bit of pressure, all of about 30 seconds worth, before the market started to continue south and hit the profit target. So it was a good little trade, and we booked our 30 points and walked away. Now, originally I thought there won't be any trade today. There won't be a short sell, at least. We'll probably flush the low and then just come straight back up. So I was a bit worried if I did take it, I'd get stopped out. But you can see the weakness in the markets across the board. It was everything, and this is the Hang Seng, so that's opened up a lot weaker, and it was nice and quick and easy. So rules are simple, straightforward. You trade it, you're going for a 1-to-1 ratio. So if we're going for 30 points on the Hang Seng, we're only risking 30 points any one time. We do the same thing on the DAX and the Dow, and it's a high probability trade. So we're sitting somewhere around the 83% strike rate, meaning 83% of the time we can expect to win. So far so good. We'll keep plugging away and we'll just watch the end of this trade. Okay, you're about to see the trade close. There you go. We just bought it back, locked in the 30 points, trade done and dusted for another day. So we'll see how the DAX and the Dow go tonight. Okay, folks, on to the next two trades. So unfortunately, this next one you'll see was a loss. Okay, and then I quickly backed it up with a winner a bit later on. So the reasoning behind this trade here, I actually was thinking it was going to bounce. I thought, okay, the momentum has started to swing. We had a good flush lower on the open, and we've had that quick bounce. You can see that 3 green candles straight back up again. And then we had a bit of a grind down, and we had another good green candle expansion to the upside. So what I was really thinking now, I thought, okay, the market is down 600 points or so on the index. It's open down, it's gapped down. I'm going to get some bargain hunters to try to flush the market up before potentially the rest of the sellers come in a bit later on. And just, they're trying to get better prices. They don't want to sell when it's down 600. They're waiting for it, to pop 100 to 200 points before they jump in and get out. So for me, I was looking for that pop on the index, on the CFD here, on the Hang Seng. And I was looking to try to see if those high lows can hold. All right. So I put in my order there at 23.34. I think I get set at 23.37. I buy. So I'm just buying on stop. I'm looking for that to continue on now. So now there's one thing to note here. The market could just as easily go up if it's my idea is it's going to pop up. We get a bit of a retracement to the top side. Hopefully I can scalp out a few up there and piece out a good little win. You can see it just triggered there. So I'm now long. I bought them and I'm just going to sit there and watch that. So like I said, I think it's going to go higher. That's what I was buying to sort of buy on the rise. And then you can see the market actually, it just pauses. That was it. I think I nabbed the high and it really didn't do anything. So there's two thoughts. If it's going to go up, it should kick on. Now, if it doesn't going to go up, if it doesn't want to go up, then the market could just as easily roll over. All right, you can see it's trying to go here, it's trying to go here, but it keeps failing. There was a seller that kept coming in and started to sit on top of that market to try to keep it holding down. So you can see that was just made a new high. You can see those first 3 green candles they've rejected. We've just taken out that high, okay, before we backed off, and we're starting to back off again. So it's about now that I start to realize, look, I think I'm wrong. I've got the wrong side of the market, okay? I thought the market was going to go up. It doesn't look like it wants to. And I'm probably going to be proven very soon that I'm wrong. I'm on the wrong side and I get stopped out. So you'll see here in just a moment, I do get stopped out. And then I start looking for the trade to the downside, okay? So just taking it off there, closed it out, all done. Now I'm going to look for an entry, and I figure if it keeps trying to push down, which it does here, I'm looking to get short. And I think I double up on this trade. I do a bit because I'm pretty confident now that we've got enough flushes to the upside and it's not going to continue on. Anyone like myself, anyone else that didn't take a quick exit, that's got long, now has to sell back into the market. And I think we're going to get expansion to the downside. So you can see I've just done the 2 trades, and then I'll really want to see that expand to the downside. Now, if it doesn't, I'm always wary that the market is still, it's down 600 or so points on the index. So we could just as well flush around these lows and just chop around these lows. So I don't want to get caught in a bit of a chop. I don't want to get caught where the market starts to reverse on me and I'm double up short, sorry. So I'm really looking to take off some as quick as I can and play around. No mucking around. If we get to be able to take some off, take 10 off, take 5 off as we go, then I'll do that. And you'll see that that's pretty much what plays out. Okay, you can see the market's pushing down, and it's about probably in a few minutes or a few seconds, I start to take off 5, and then I think I proceed to take off another 5 just to lighten up a bit. I don't like to be too heavy if it's not going to power down. Now, you get the Hang Seng could really do that. I think I'll just take off 5 more. There you go, another 5 there. So the Hang Seng can do that, and that's what I'm generally looking for with the Hang Seng. If it starts to hold and you're going with the momentum, which is down or up, in this case it's down, and it starts to power down, that's what I'm looking for. The market could really start to power down. Then you're happy to open it up. When it doesn't start to power down, and we're starting to look like there's buyers stepping in just below the lows, into previous lows like we did today, then I don't want to hold it too much, because the way it could power down, it could just as easily ramp straight back up again and trap all these short sellers and then ramp straight back up. So I'm getting caught offside again. So you can see that's why I was kind of eager to lighten the load there. So you can see here, I've just, the market has bounced a bit, and I did actually take off another 10. So I closed out that first 20. We've only got 20 more going now. You'll see that I just wanted to get some off. I just didn't want to be hanging around too much. This market, like I said, when it's down 600 points or so on the index, it could easily bounce. Okay, this thing could just be really savage to the upside. You've got to take your trade. As I see it here, I did go long. I was looking for that bounce. I was wrong, so I've got under the short side. I'm getting that right. I'm just trying to manage my risk as I go. All right. So really now it's just about managing out of those last. Take some more off there. So it's just easing out of the position. If it doesn't go hard like I expect, if this market's going to capitulate, great, I want to be in it short. If it doesn't and it starts to look like it's going to hold up, I'm just going to get out. Maybe I don't pick the bottom. I think I have a limit order in there at around 210 or so. It eventually gets there, but I'm out. I'm done and dusted by then. So I don't want to muck around. Like I was saying, it's coming into support zone. It's down a lot. It's extended in the overall market in the index. So it's really just a matter of managing their risk, taking out as much as I can, as I feel confident with, and then closing out that trade. So you see here, close out eventually. I think I close it all out in a few minutes or about a few seconds, really, if it doesn't start to push down like I would expect. So you can see here, I'm just closing out the last of the trade. I've taken off that limit order, figure out, okay, I want out. I don't feel like this market's going to go down, and I've all closed out. So I'm all done on that trade there. It's really just a matter of, like I said, you've got to manage your risk. If it doesn't feel like it's going to keep going down and it's not, conforming to your expectations, then you're better off being on. You can always re-enter. You're better off being back on the sidelines, reassessing. If you feel like it's going to keep going, then you can re-enter. But if it doesn't, then at least you're out and you've booked a small gain. You don't need to take the whole lot. You don't need to get the high and the low and all that sort of stuff. No one ever does. If they tell you they do, they're lying, or they got very, very lucky and it's a 1 in a million chance. So really, like I said, managing your risk and then reassessing as you go. Okay, time for a review of the charts. We'll stick to the 1 minute charts here. We're going to do the Hang Seng, the Nikkei, and then the ASX 200 or the SPY. I've got up the SPY 200. So you can see here, this was the action. All right, so it was about here when I was shorting it. So the initial trade on the breakout, or the strategy, the 5 minute trading day, was that little short through here. We got that bounce back up, and then we started to hold this, and that was my initial long. So like I said, I think I got the high there, so it was great, great trading there. I think I got it at 37, might have been, it might have hit around 38, 39, 40. So only a few pips on my way in my way to start with, and then it turned around and sank on me. So really, after that, it was all about just management, getting out of that trade. It didn't go anywhere, taken off, and then I was just watching that for a short sell, which pretty much was just in here, shorted in there, and then see it push down. So I edged out of the trade somewhere in around here. Now that was a good trade. The buy wasn't a crash hot trade, obviously in hindsight, but there was a reason for it. Okay, you can see the MA starting to climb back up. We were around this support zone. We'd already rejected into this support zone there, so I thought we might get a bigger flush before we got any sort of big move down or any move back into support. But that didn't play out. I was wrong this time, and that's why I was happy to jump in short, because once I was confirmed that I was wrong, okay, now we're going to go with the trend, and we're probably going to take out these lows, and we're going to start to attack into these lows here, back into support, which we eventually did. But I got out here. I was happy to take it off there because, like I said before, if it's down 600 or so points on the actual underlying index, there's a chance that you could really get a savage bounce. And I don't want to be part of that. So I want to take my gains when they're there. If it doesn't look like it's going to be a fear-based sell-off. You're going to get a big extension. To go for the big trades, then you've got to have that scalping mentality. And that's pretty much what I did there. Got out there. It did bounce back up eventually, then headed south. So really there was some more trades. You could have got re-entered short just in here. You'll see just in here off a lower high, you're still with the trend, the longer term trend. You had a bit of a pullback. You got the 50, the 20, and the 10 all starting to roll over again. You've got my nice little lower high, and you've got this. This is what I like to see, an easing in the momentum. So that's momentum shift back up, and we want to see when the momentum shift is back down again, especially when we're trying to go with the bias, which is the bias is down in this case. Okay, so nice little short in there. That could have played off. I really probably wouldn't have been going long because you can see now it's established to the downside. You've got another little shoulder trade there. You've got 1, 2 moves, maybe 3, 2 moves up. Then you got your shoulder. You could have sold in there. Didn't go too far. And that's pretty much the action, okay, on the Hang Seng. So let's get over to the Nikkei, and we'll just have a look at how the Nikkei is playing out, or how it did play out. Now, the open was right here. Okay, so just mark that up. That's about the open there. You got the market was pretty much, it popped up and then just headed south after that. Now, I was watching it here, but I wasn't convinced after this action. Well, not that one there. Just get rid of that. After seeing this action through here, I didn't take that. I didn't trade anything on the Nikkei, and there was a reason, because I just didn't trust that sort of grind down. I thought, okay, if I take the break of that low, I could get flushed on a bit of a pop. Okay, it could be just a flush, and then it could turn around and retrace on me. Momentum was down. Once we got this kind of a move, and you got through support, and you got this pullback, then I'm really just looking for a 3 candle setup, going with the trend, and that's it there. Played out nicely. You could have had another little trade here. That's your high. I'll probably take that one there. Okay, that's a nice little continuation pattern. You got an expansion to the downside. You got a bit of contraction, a bit of a pullback, and then you could have just taken the same sort of thing. So you're sticking with the trend. The bias is down, and you're just trading off the pullbacks. Okay, so you could have added, or you could have taken one position, maybe bailed, got re-entered there, bailed on a pop, re-entered there. Okay, so you've got a number of moves there, and there was a couple of more trades later on, but they weren't quite as nice, and it was in an extended market. So when you start to look down in these areas, the market's getting extended. And look at the MACD. So the MACD is basically, if we just draw that up here, is basically heading higher, which means to me we're just starting to run out of momentum. All right, so you've got to be wary of that. Once you start to get late in the trend, you run out of momentum on the downside. Anyone who's stacked up on the short side has to turn around and eventually will have to get out, which means buying back into the market. So if you're starting to sell in here, you're selling that pop, you can see what happened. It basically went, the drop there, it turned around and popped straight away. Okay, so that's it for the Nikkei. We'll get on to the SPY now. Now, I did mark this one up. I did send it off. I didn't actually trade the SPY either. I was really just mucking around. I think it was coffee time or breakfast time around then after doing the morning reports. But you can see here is the market open. I'll just draw that up here if I can grab that. So this is the market open. We'll not worry about that. All right, so the market drove up. Okay, on a 5-minute chart, that's all sort of price actions, one-way price action to the upside. Now we've got this level here. That move up there. There's a big, zone, pretty much the overnight highs. So there's a high here. I think there's a high here, highs here, highs in here. So this is roughly, I think it was about 4 o'clock. This is roughly where we closed the day session. And you can see these little highs here. What the market did on the open was pretty much drive up, take out all those highs, take out all the stops, and then turn around and dump on it. Okay, so the market can do that. Index traders, they love doing that. Algos love to do it time and time again. So you just got to be wary of that, and you got to be willing to jump in short. Now, I didn't trade that. I do know some that did trade that, and they traded it really nicely. Okay, so it turned out really well. So if you're looking at the price action, what we're seeing is that RTF. I'll draw that up a bit clearer. Hang on 1 second there. There we go. So we've got an RTF here. So it's a failure at the highs. RTF meaning, we've broken down, so that it's starting to roll. We've come back up, retest, and we failed. So RTF, retest, fail. Retest, fail at the top. And then what you've got after that is a nice little shoulder trade. So if you're taking the break, essentially the break of that box to the downside and your risk is above, I think you've only got really a few points risk there. Let me just see. That was, say, 10-point risk has it fine. So 10-point risk on that trade. You sell on the stop there, your risk is just above the lower high, the shoulder, and you can see how it played out really nicely there. I was looking at it somewhere around here to do the same sort of thing. I think it did. Yeah, it did eventually. It did eventually do the same thing. Similar thing up here. I was looking for, actually, it was around here. I was looking for that shoulder there. It had a bit of a deeper pullback, and then we failed again. So you can see action's playing out. There's your RTF again, looking for that shoulder. It didn't play out here. You really should have taken a break of the downside there, risk above. It didn't play out. You got a bit higher. So really what you're doing is looking for that 3 candle setup, or you could even take that away. You've got a nice little shoulder there, okay? So you've got 2 moves back up to flush out a few of these shorts, flush out a few more shorts, and then drag in some more longs, okay, sorry, sellers back into the market here. You've got a nice little shoulder. And then later on, we've got a nice 3 candle set up there. We've got there's probably a few more, a bit of an RTF here with a 3 candle set up there. Okay, so you can see there's quite a few setups on the downside once you start getting it right. Now, I find these are harder to take. You've got less of a strike rate on the earlier trades, but when they pay out a lot bigger, okay? Because you're getting in when the outcome is unknown rather than later on when the outcome's known. Down here, the outcome's known, the market's going down, but they can pay out a lot less because the market is getting extended. So risk to reward, your risk becomes a bit greater for a higher probability trade, and your reward comes a bit smaller. But prior to that, your risk reward's quite skewed really, really well. Small risk for a big reward, but the probability of it playing out is a bit less. Not a lot less. If you're reading the structure right, then all you got to do is jump in because it's worthwhile taking. You can take 3 losses and get 1 win, and the 1 win can easily cover that that loss. If you do this 3 times for a 10-point loss, you can see that traded just that leg down was 43 points. So there you go. You've got a 13 point, 14 point net trade on your hands, let alone when it keeps going down like that. Okay, so that's pretty much all I want to talk about. We'll finish it up there. Thank you very much for joining me. And like I always say, if you do like what you hear, jump on the YouTube channel, subscribe, hit the like button, and help us grow this. Help us grow the channel. And feel free to join in the community. We've got a nice little trading community, good little chat there. We're all, we all love our trading. We all get into it, and everyone is happy to help. So if you want to jump on there, just go to the website. It's www.tradethestructure.com and take a look around. Subscribe for free. There's a lot of free information, and I'll be doing more videos like this, live trading, just to show you how it's done. And I think it's very important to see from a trading perspective, not just like we've done in this review, but seeing it live. If I can talk through it live, the reasoning behind the trades, then it helps me. It's great for me. It's good practice as well. But it also helps you see different things that you may not normally see. Okay, so yeah, that's pretty much it. Thank you for joining me, guys, and have a great weekend. We'll speak to you again soon.